Saw AngloGold Ashanti shares fall by more than 3%. This after the mining giant reporting a 28% plunge in full-year adjusted headline earnings per share. That's to 239 US cents. The drop is attributed to wildcat strikes at its South African mines. Earlier, I unpacked the numbers with AngloGold Ashanti CEO Mark Cutifani.
I'm disappointed. Obviously, the fourth quarter, we came in at $7 million against a target of 300. Had we made those numbers without the strikes, it would have been up there with our best performance. So disappointed, but at the same time, the foundations are there. We've got a great future, so proud of what we've achieved. A little disappointed to finish it on that way, but these things happen.
Looking at your commentary around capital deployment, obviously you've been watching that for some time now. Coming in at the projection is $2.1 billion for 2013. Give us an idea of where you've significantly cut back on capital deployment or capital expenditure.
Well, firstly, we've slowed some projects down. We've slowed our developments in Mali with the unrest and the uncertainties there. We've slowed some of the expenditures in the DRC. We've slowed a couple of things in South America and the US, just slowing a few things that are new studies and new projects. Cut a little bit out of Colombia, but still big commitment there. And we've slowed one of the developments up in South Africa because of probably reconfiguring that to some degree. So everywhere has experienced a bit of pain. We've pulled our belt in right across the board. So it's hit mainly the new project areas.
When it comes to spending on exploration and feasibility studies, of course, this is all about the future. What about the balancing up against the opportunity cost of that? I mean, how did you make that decision and how do you view those decisions that have been taken?
I think the important point to make is when we talk about cuts, sometimes that word is a bit misleading. We've slowed some projects up because if we've got a $3,000 an ounce gold price, then we will accelerate those expenditures and more to get more production out there. But today, gold price is a bit soft. It's a bit tight in this 12 months because we've got 3 new projects that are being fully committed, being Tropicana, Kibali in the DRC and CC&V in the US. So they're drawing funds, plus we've got the 2 extensions here in South Africa at Moab and Penang. So we've been slowing those projects up, pushing them out a little bit so that we make sure we keep the balance sheet in good shape and we don't stress anything, keep our investment grade rating, be responsible with shareholders' money and at the same time continue paying some dividends.
John Paulson, of course, one of the biggest shareholders of AngloGold Ashanti, has done some calculations on what the group could look like and what the share price could do if you split up South African and international assets, saying that the share could increase in value by 68%. I'm sure this is something that you've also looked at. Do you agree with him?
Well, I think he's probably conservative. I think the company has been undervalued by more than that. I think that was the most important point he was making, is the company's been devalued. So the challenge to the team is to get that value into the share price. Now, he's proposing one way of doing that. There are many options that the team is looking at, including the one he proposed.
So AngloGold is looking at potentially splitting up South African and international assets?
Looking at a range of options, hasn't determined where it should go, but it has to listen to its shareholders and their concerns regarding the flow of information from South Africa. Now, what I've put on the other side of the ledger is I think South Africa is a good place to do business. In watching the Goldfields transaction, we've seen no demonstrable uplift in value relative to its competitors. So at the moment, I'm saying that looking at Goldfields, we haven't seen an uptick in value, but we will watch that carefully. And the board is evaluating all options as it always should. But there's been no decisions. We still have a great global portfolio, and that's our starting point. And at this stage, seeing some of those restructures occurred, we've not seen a demonstrable value uplift. So it's something that's on the table. We're looking at all the options, but no decisions.
And as you step away and move on, moving to London and, of course, heading up the Anglo-American, how do you feel about the company you leave behind? I mean, and what do you say some of the significant changes that you've seen over your time here?
Well, we talked about that today. 70% improvement in safety, 70% improvement in environmental performance, that is less spills and issues, significant improvement in our relationships with most of our home communities, tripling of earnings, leading industry in terms of returns. I think they're the big contributions. Today, AngloGold has a production pipeline that will last more than 15 years, better than any other company in the industry. Number of options. What we have to do is get to the gold price, or get to the share price, sorry. It may be both.
And of course, one of the key events on the South African calendar is the budget day speech coming up next week. There are a lot of proposals on the table: the mineral resource rent tax, a change in fact to royalties, carbon tax potentially, an export tax, CSR initiatives, and trying to incentivize mining companies. What do you think is going to be said this time around about all those elements which still have an element of uncertainty to them?
Let me start with what I think should be said. First point, the mining industry, in terms of all of its revenues, only 7% has been returned to shareholders. The other 93% of revenues from the South African industry is actually being paid out to suppliers of goods and services, people's wages, local community development programs, and governments in terms of taxes. So, and in fact, in the last 5 years, we've spent more money in South Africa than we've actually taken from the revenues. So the mining industry has been a net importer of cash and capital in building the industry. So when people say we think we should increase the taxes and the tax takes, what they're saying is we think we should take more than 100%, because at the moment there's only 7% that's gone to shareholders. We have to make sure this industry remains viable and attractive for investors. So I'm really concerned that these discussions are scaring people in an industry that has actually shrunk in value in real terms 30% in the last 5 years. The all-share index in South Africa is up 60%. The mining index is flat over the same period. And if I take inflation into account, the mining industry has lost 30% of its value for its shareholders. Anybody who thinks mining has some big pot at the end of the rainbow that can be taken as part of a tax take actually doesn't understand the numbers. We are a vital part of the industry. We need to continue to invest. We need the government support. We need everybody's support to be successful. So I think the Finance Minister understands some of those fundamentals, and that's why he's cautioning on people's expectations in terms of what more the industry can contribute. But we'll be there. We'll be part of the conversation. We will always make sure we pay the right amount of tax, but we do have to take it into the context that we've seen a shrinking of the industry in the last 5 years.
If there is certain elements of the mining taxes that are increased, can the mining sector in South Africa, could AngloGold Ashanti as it stands right now, afford to pass those taxes on?
No, because who do we pass them on to? We're a price taker. So in terms of in terms of gold revenues, we don't get to determine what the price is, so we can't pass them on. At the end of the day, what it means is less employment and less community development programs, simply because you don't have the money. And in a country where electricity prices are up 278% in 5 years, and the current proposal would take it to 578%, we're under pressure in our cost structures. And at the end of the day, the only other place you get to go is you can't employ as many people. I don't want to see that happen.